Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Tata Motors, what needs to be done in this stock and where is the bottom that is lying. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Tata Motors, a small request to kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you will have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you can pay $100, then you get 1 year access by paying for 10 months, so that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the YouTube membership that is available for you by paying with any other method. Now about the company. Established in 1945, Tata Motors makes passenger vehicles as well as CVs along with tractors, and they are the they have worldwide presence with big acquisitions in Europe, and they have a lot of presence in Europe. Around 50-60% of their business comes from Europe. It is a part of the Tata Group, very strong management, and the market cap of the company is around 145,000 crores. If you look at the financials, then these are December FY22 numbers. Then sales went down by around 4% in the December quarter, and company came into losses from profits of around 2,900 crores. The debt is extremely high. Return on equity of 24% is getting hit. So that is also, and margins are also getting hit. So 12% margins is on an average of year on year, but I believe it's going to go into single digits with the kind of numbers that we are seeing at the moment. If you look at the performance, then stock has done really well in the last 18 months. So what has happened is that it has come back from you can say very low levels in the mid 2020 after the pandemic, and numbers may remain under pressure as we see with the European markets being under pressure and the war that is happening in Russia and all. So the European you can say business is going to be impacted big time, especially with high raw material costs, semiconductor prices, and other kinds of steel metal prices going up. I think all auto companies, apart from even Tata Motors, there'll be other auto companies that are going to be hit. So things are difficult on the short term basis. It has corrected from the top as Europe remain under pressure. So we have seen it has come down from 540, 550 levels all the way to 420, 430. But I think there is more downside left. Bottom line has to significantly improve for the company, for the stock to consistently go up, and it seems like in the next 2 quarters we are going to see even more pressure on the business. So why I believe it is an avoid for the time being. It is a complicated business. There is a lot of parts to it. There are a lot of combinations, permutation that has to go well for the company to really do well. There was pressure in the business here in India. There's pressure with respect to the tractor business with Mahindra doing well and Escorts doing well. So Tata Motors was lagging behind, although Tata Motors did well in the domestic car segment, passenger car segment, but then European segment is not doing that well, and we are seeing the kind of pressures Europe is having. Most of the businesses that are in Europe, or most of the companies that are listed that are in Europe, is getting bruised and battered. So there are a lot of things that have to go well for the business to do well, and that is why it is an avoid. And numbers are very hard to forecast. So very hard to say that if suppose Europe comes back into a picture and does well, say from December quarter onwards, how will Indian passenger car vehicle market and Indian tractor market will do for Tata Motors? So valuations are stretched at the moment. I believe some business here or there in domestic or global might be affected. See, even the business here in India will be affected because of the higher raw material costs, and there could be higher rate hikes or greater rate hikes coming in because of the higher inflation that we are seeing here in India. So it's kind of a a double whammy for the businesses, especially in the auto industry. And interest burden is still high, and once interest costs go up, which it is set to do here in India, I think things will look even bleak for the business. Uh, European geopolitical situation may hurt firm badly in the next 2 3 quarters. I think it will take at least 2 quarters for the business to uh, get up onto its feet in Europe. And there are better options available in the same industry. In the same auto industry, you can look at two wheelers, you can look at auto ancillaries, you can look at different ancillary plays. So not quite just looking at a particular company like a Tata Motors, or even looking at four wheelers. You could look at other kind of businesses. And even if you don't like autos, you can look at other businesses altogether, other sectors. So I think stock has run up already from around 280 300 levels all the way to 550, and then is correcting. I think this is not the time to really get in. Let things settle down a bit. We are ready to buy 10 15% higher with some clarity, rather than buying here and just waiting for the move to happen. In terms of technicals, I believe 410 is the final support, currently around 430, 435. Probably if you are holding the stock and you're not making a lot of losses, keep a stop loss at 410, because once 410 goes on a closing basis, I see 350, 340 coming in, and it will be a full circle for the stock from those levels of 280 300, and then going all the way to 550 and then coming back. So 340 and then 280 are the levels that we are looking at once 410 goes. So very precariously poised at the moment. Avoid buying at the moment. Wait for some clarity on the European business, and clarity on the skirmishes that are happening in Europe. Let it either decline or consolidate for a few weeks. Let's see how the business pan out. Let's see how the numbers pan out, and then take a call on the stock whether to buy or not. Charts have deteriorated appreciably from the top. There's a lot of resistance at 450 460 levels. So probably if you really want to buy into the stock, wait for a total collapse of the stock, or complete breakdown of the charts, and the stock going to 360 350. Those will be better levels to accumulate the stock, rather than buying afresh at this point of time. And those who are holding can keep a final stop loss at 410 on a closing basis. Those who are holding for long term, they could look to add more around 350 360 and average their prices, and hold for 3 years. I think over the next 2 to 3 years you will see much higher levels on the stock, but at the moment there will be pressure for the next 6 months on most of the auto companies. So I would still avoid the stock. Look for other options, especially look for other businesses or other sectors to invest into. Can be extremely volatile going forward. So be very careful buying into the stock, and have less than 5% exposure into such stocks. So this was my video on Tata Motors. Please like and subscribe my channel and hit the bell icon so that you get my video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.